Basic bookkeeping series continued. Let's talk about mileage versus actual expenses. So the main reason that I promote or try to get people to use the mileage side versus the actual expense side is that you only get to choose this one time, and if you do the actual, you also have to keep mileage. So the majority of the problem that I see with people is they don't want to keep mileage in the first place. And if you're not keeping mileage, then the other things are not going to, they're not going to do you any good. So, so first off, you want to keep your mileage, and that's going to be round trip, and you will have to in some type of written form. It can be electronic, it can be on paper. Just remember that when you work from home, it is an actual, your main location is in your home for your business, then you can start all of your trips from your home. Then that goes out to the furthest point for your business trip and back. So if you are going to a Goodwill, for example, that is 60 miles away, then whatever you do in between those two places is nobody's business but your own. You were going to the furthest place and you're coming back from the furthest place. So all you have to do is write down, if it was 60 miles, so you would write down 120 miles round trip, and you would write down, have the date, and you would write down the Goodwill, or any other business stops that you made during that time period, during those miles. So you have to have that first and foremost. You also have to, we have a cameo by Joey. You also have to have your odometer reading from the beginning of the year or when you started your business and the end of the year. That is going to give you the overall miles that you drove. It is going to help determine how many miles were, what percentage of the miles were business versus personal or commute. So anything that's not business is not counted. So whether it's personal or commute doesn't matter. Commute is if you are driving to a job where you get a W-2, or even a 1099 if it is that you might have to relate to a different Schedule C, and therefore keep those miles separate. So again, you have to keep the miles before you can do anything else. The only way that this would be different is if the business itself owned the vehicle. If the business itself owned the vehicle, then all of the actual expenses would be deductible, and you wouldn't have to keep miles because it is only a business vehicle. You're not driving it for personal reasons. Okay, so the next step is you've been keeping your miles, and we're going to say you just started your business, you kept your miles all year, and you've decided that that's the method you're going to take. That number of miles times the amount per mile that the IRS allows, it will be the deduction that you are able to take for business. Now, if you decided or thought you would like to try actual expenses, then remember this. You have a choice when you first start your business or when you first get a vehicle to decide on mileage or actual expenses. If you decide on mileage, you're great. you go through, and if you ever decide that you want to transfer over to actual, you get that opportunity one time. If you start out and you're taking actual expenses, then you have to maintain keeping actual expenses for the life of the vehicle in your business. You would also be entitled to depreciation if you keep actual expenses for your vehicle. But please remember, you still have to keep mileage. If the business doesn't own the vehicle, you still have to keep mileage. So if you're not keeping mileage, then forget about the actual expenses. Mileage, vehicle expenses is one of those places that the IRS is going to look at, right? There is literally a box on the form that says, are you keeping your mileage? Yes or no. Is it written? Yes or no. I mean, they're asking more than once. It's a very specific place that can trigger an audit if you don't do it right. Absolutely count all the miles. Absolutely take everything that you can get for a business deduction. Absolutely make sure that it's written. Just like keeping your receipts, you must keep your mileage, period. There's nothing more to it. It's an absolute requirement, or you're gonna get disallowed, and that can be a pretty big expense to get disallowed on. If you get disallowed, and so you get an audit and they find an error, they can go back as far as they want to on every tax return you've ever done. I don't want to scare you. You should never be scared of the IRS or getting an audit or the state, whatever. You should never be scared if you do your due diligence and you keep all of your receipts and you keep all of your mileage. That's as simple as it is. If you don't, you're only hurting yourself. So if you keep your mileage, keep your mileage, keep your actual expenses, do it for a whole year. If you are now at this point in time right now, we're in February 12th. If you have not filed your taxes yet, go back and look through your bank statements, your receipts, and see what you can find for actual expenses. You can figure out what your total would be as for actual expenses if you've done the other part, and then you can weigh the pros and cons of each one. Do you want to track all of the things, both mileage and actual? Or do you want to keep it simple and just do the mileage? Or you're not doing anything either way, so you now need to go back and figure out what your mileage has been for the past year anyway. So you can use Google Maps, you can use your receipts, the combination of the two, in order to figure out what you have done in the past as far as mileage, and then write it down. Again, write it down. It has to be written. And I don't want to try and see you guys try and recreate it after the fact. Once you get audited, it's almost impossible. You're not going to get all the miles. So get them all now, get them written down, and make your decision. And then whatever that decision is, you'll stick with it. All right. I hope this helps, and I will see you next time in the Beginner's Bookkeeping series.